In San Francisco, and this is Bloomberg Technology. Coming up in the next hour, new details emerging in the arrest of Huawei CFO Wang Meng as she appears in a Canadian court. Turns out she was taken into custody in transit from Hong Kong to Mexico. Plus, we talked to a Lyft investor about whether its plan to beat Uber to the public market is a smart or risky strategy. And fixing faulty AI software like facial recognition might be cute for things like Animoji, but it has a dark side, one that can impact civil liberties and security. Microsoft President Brad Smith tells us his plan to stop that before it's too late. But first, to our top story. The CFO of Huawei has appeared at a bail hearing in a Canadian court. Wang Meng has been charged with conspiracy to defraud banks, and Canada's Crown lawyer told the judge she's a flight risk. Meng allegedly violated sanctions on Iran by selling Huawei gear to the country. But the big question remains, did President Trump know about the arrest as he was striking a deal over dinner with Chinese President Xi Jinping? Earlier, Bloomberg's John Farrow asked U.S. National Economic Council Director Larry Kudlow that very question.
I did not know.
Was it discussed with the Chinese? Did they bring up Huawei at all?
Not at the dinner.
When have they brought it up?
I didn't hear a discussion of Huawei.
Have they brought it up subsequently since the arrest, Larry?
Well, again, not at my level. I can't speak for everybody, but the president apparently did not know either.
Meng was arrested while she was traveling from Hong Kong to Mexico. Joining us now to discuss Bloomberg Tech's Mark Gurman. So, Mark, give us some more context on who Wang Meng is and how important she is to Huawei.
Right, so she's the CFO, and that automatically makes her one of the most important people at the company, not only in China, but globally. And her father, Ren, was the chairman and the founder of Huawei. And this company, to give some context here, is likened to being the Apple of China. So you can imagine what the situation would be if a top Apple executive, the CFO of Apple, was arrested while in transit in China. That's sort of like what's happening with the Huawei CFO being arrested in Canada at the request of the United States. A very key player there, oversees many of the businesses. And just to give some context about this family, this is a famous family that is likened to the Bill and Melinda Gates family that we have here in the United States in terms of the prowess and how well they're regarded locally and what they've done for the technology sector.
So the big question is, will this impact trade talks? The Chinese have made their outrage clear. Here's what Larry Kudlow had to say on Bloomberg earlier about that.
Just see them on different tracks. And I think the trade negotiations, which have a lot of momentum, again, from the two presidents on down, those are going to continue. I do not believe they will be interrupted by the Huawei enforcement action.
Mark, what is the sense of the relationship between this arrest and the overarching issues and trade tensions at play?
So the arrest could not have come at a worse time for people with a stake in the trade negotiations between the United States and China. If the U.S. requested the arrest of the Huawei executive as part of trying to create some leverage for itself for the trade deal, that's one piece of the story. But the other possibility where the two things are not related, that might be even worse in some sense, because that just creates another distraction and another bullet point for the Chinese to use against the U.S. So that would be a very poor, in my opinion, negotiation tactic to take a top Chinese executive into custody in the United States and basically causing this international situation.
Now, at the same time, Huawei is facing a ban on its equipment in the UK. More developments on that just in the last couple of days. What is happening there?
So just to give some context here, Huawei basically has two core businesses that are impacted across the last year due to these numerous situations we've been talking about. One is their devices business. They sell laptops, phones, smartwatches, and that's their phone business. That's what's been taking over Apple in some markets globally. Their other business, which is even perhaps more important, is their telecommunications equipment business. These are the different types of equipment in cell towers and different infrastructures that allow phones to connect to networks. This ban would have a big hindrance on their long-term future because 5G is the future. That's what they're banking on. That's what they're so ahead of the competition on. So this would basically, harm their businesses locally. The question is this going to harm consumers who would not be getting that 5G technology because of the United States' insistence that countries around the world should not use Huawei equipment?
And what is the status of Huawei's use in the U.S.? Because it's faced the same situation here.
In the United States, it's even worse, and this has been going on for about 6 to 9 months, I believe. So Best Buy, one of the biggest retailers, not only in the U.S., but in terms of stacking up to how much revenue global retailers make, stopped selling Huawei products very recently. The United States has banned the Pentagon from distributing Huawei phones and other products to Pentagon employees. There's been other retailers that the United States has been pressing to stop selling Huawei devices as well. So from that perspective, they're hurting Huawei's bottom line. From an equipment perspective, it's also harmful because now the carriers of the world are looking to other providers of 5G telecommunications equipment who might not be up to speed with what the Huawei product has been offering. So Huawei is being hurt in both directions here in the United States, and it appears that the United States is behind efforts in other countries, like you mentioned, the UK, also Italy, Australia, New Zealand, who are also weighing the ban of Huawei telecommunications equipment in the coming months.
And now it's CFO in custody. All right, Mark Gurman, I know you'll continue to follow this for us. Thanks so much for stopping by. Later on, we're going to continue this conversation with Microsoft President Brad Smith, get his take on continued trade talks with China. I also will ask him whether Microsoft is at all concerned about its executives traveling in China at this moment. Well, ride-hailing startup Lyft is one step closer to going public. The San Francisco-based company filed early-stage documentation for an IPO Thursday, pulling Lyft ahead in the race among ride-hailing companies to go public. Sources say Lyft is targeting an IPO in March or April of next year. Main rival Uber is also aiming to list in the first half of 2019, according to Bloomberg sources. But which company will get there first? And what does this signal for the tech IPO landscape in 2019? Joining us to discuss, Oceanic Partners CEO Tim Sullivan. Oceanic is a venture capital firm which has done more than $3 billion in transactions and is also an investor in Lyft. Tim, thank you so much for being here.
Thank you.
So do you think beating Uber to the punch, at least in terms of filing, is this a risky strategy or a good one?
I think it's a great one. I think Lyft is a company, and Uber as well, that has their largest line item marketing costs, and this is effectively free publicity for them. Anything that can remediate that marketing number is a good thing.
So what do you think really differentiates Lyft from Uber at this point, or is ride-sharing really a commodity?
I think ride-sharing is a commodity, but I think that Lyft, starting a few years after Uber, was able to really learn from a lot of the mistakes that were made by Uber. And I don't say mistakes, but I mean their initiatives to go abroad, and they probably didn't expect the crackdowns from regulators, the punishing price wars, the forced mergers, and other things that happened. But as a result, Lyft focused here in the U.S. and is now in more markets than Uber, and has a very efficient business, lots of cash on the balance sheet, and a great brand.
But Uber's in more markets abroad.
Uber is in more markets abroad because Lyft isn't in any markets abroad.
Well, they have been experimenting in Canada, haven't they?
They have been experimenting, but I think Lyft is the kind of company that's very conservative in terms of it's not going to leap before it's looked carefully.
The company is, as we believe, looking at a valuation somewhere between $18 and $30 billion. Where do you think that valuation will land?
Our analyst believes it's somewhere in the low to mid 20s.
So when did you buy your shares?
We bought it at $1.8 billion valuation.
Secondary shares? We
bought secondary, and then subsequently we've participated in a few primary rounds as well.
Okay, so how much do you stand to gain?
We stand to make approximately a 4x on our investment.
Okay. So What would you like to see Lyft do? Because there are signs that at least Uber's core business is starting to plateau, which means maybe the profits will come from Uber Eats. Maybe it will come from self-driving cars, air taxis. Who knows? Eats is a huge business for Uber. So how does Lyft find additional scale?
I think that Lyft finds additional scale through the philosophy and strategy that they've employed from day one, which is a partner-centric mentality, which is really, diametrically opposed to Uber's go-it-alone strategy. Doing things, there could be bicycles, there could be scooters, there could be a whole slew of different options and opportunities that I know that they're exploring right now, but they're going to be ones that are going to be incremental to the bottom line as opposed to pioneer projects maybe in areas that prop up the top line but don't necessarily flow.
What other exits are you going to be following in 2019?
I think we're going to be looking for something from Airbnb at least to be ready for an IPO. I don't know that they're necessarily going to file in 2019. Palantir would be great to see something there. Obviously, there's been a lot of anticipation, speculation, and desire, but not a lot of word from the company. But I also say, and I think that the broader markets swaying and swinging the way that they have over the last few weeks, few months, could be problematic for the IPO market.
Why?
If we see another 2008, another 2001, 1987, things could lock up for a little while.
You think we could see another 2001?
I don't think 2001. I think that the business models are much more baked. It's not the back of the napkin businesses that we saw in 2001. These are companies that have been around for 8, 10, 12 plus years with top lines well over $100 million. So they're real businesses. So it wouldn't be like 2001. It would be a different catalyst, and there's a lot of rumor about what that catalyst or catalyst could be. I think it's all speculation at this point.
So where else are you looking to invest? Knowing that we could be on the verge of some sort of correction or crisis?
Right.
Even?
Our investments are really focused on liquidity, in a 2 to 3 year time frame, looking for a 2 to 5x return. So if things do lock up in the public markets in terms of IPOs, we'll be looking at M&A and other strategies to exit via the private markets. We're going to stick to the private markets. We feel like that is going to continue to be a phenomenal place to be.
So you're going to encourage potentially some of your other portfolio companies to sell?
If that's what makes the most sense.
All right.
If that's the exit.
Oceanic Partners CEO, great to have you here.
Thank you so much.
On the show. Thanks for joining us. Okay, coming up, Australia cracks down on encryption, what it means for apps like WhatsApp and Signal, and could other countries follow suit? That is next. And if you like Bloomberg News, check us out on the radio, listen on the Bloomberg app, Bloomberg.com, and in the U.S. on SiriusXM. This is Bloomberg. WhatsApp, one of Facebook's major products, could be facing a tough time in Australia. Lawmakers there passed some of the world's toughest anti-encryption legislation Thursday. It's a bill that seeks to force tech giants, including companies like Facebook, to help decode messages used in terrorism and organized crime. The new law thrusts Australia to the center of a global battle between tech companies and governments over privacy and security. Here to discuss who else but Bloomberg Tech Sarah Fryer, who covers Facebook for us. So WhatsApp messages are encrypted, as I understand it, from end to end, specifically so that the government can't get to them. And would Facebook ever do something like this?
No. They have had legal battles in other countries like Brazil over the encryption on WhatsApp, and this is something that they're not going to change. So basically, people can decide whether to use it or not, but this is their play for a kind of messaging service that is not surveillable by the government. That's something that WhatsApp is. It's a very big selling point for the app. That said, there have been a ton of issues recently with this encryption, right? We've seen WhatsApp cause a lot of viral news sharing that has led to violence in some countries, including India and Brazil. And so there is a big risk here about what the future of that platform looks like, especially as it continues to grow.
So how has Facebook handled that? I mean, you wonder, could the law force them to do this in situations like this?
Well, they have decided to change some of their auto forwarding. You can't forward to more than 5 people in India, and in other countries, they're not restricting it as much as that, but the government can have that kind of an impact. I mean, the thing is, Facebook has said that they do comply with local law where they have to, and so maybe they could create an Australia-specific version of WhatsApp, but that would be very much against the sort of principles of that app.
Meantime, there's been a lot of reporting on Facebook morale. I know that you have been talking to employees. We're seeing some multiple camps emerge. Many employees, as I understand it, feel sort of attacked by the spate of media coverage. Others want to leave. What are you hearing from employees?
Well, there are a few different opinions here that I'm hearing from the employee base at Facebook, and one of them is just we can't win, right? If we do more to try to police our platform, people will say we're embedding ourselves too much in their lives. If we don't take control of what's going on, then people will say that we don't care. And there are so many things that they need to start working on that are not going to help them grow. And the stock has really declined over the past few months. And employees are wondering, well, what are we doing here? I mean, when are we going to return to stock growth? Because I've got a mortgage to pay. I have kids to put through college, and we shouldn't be too worried about them. But I think there is a lot of sense of being under attack at Facebook. But they're just coming to terms with the fact that they're so powerful now. On that note, we spoke to Antonio Garcia Martinez, former Facebook product head, who suggested that Facebook should be broken up. Take a listen.
This will sound heretical to my former colleagues, but I don't think it's crazy to suggest that maybe Instagram and Facebook and WhatsApp should be independent entities. Yes.
All 3 of them should be independent entities.
Yeah,
why?
Well, it's not clear there's a lot of value that accrues to the actual user and having them sort of mussed together. And I think it's clear that at some point, Facebook actually lost the ability to create new user experiences that users found compelling. And so instead it had to either steal those in the form of stories from Snapchat, or it had to buy them.
He's just an observer. He's not a regulator. He's not an investor. But what do you make of that suggestion? So the emails that were released this week by UK Parliament are going to add fuel to that fire, that consideration of should Facebook be broken up, because what we saw in those emails was Facebook doing some anti-competitive things, using their users' data sort of as a bargaining chip with their partners and apps that were built on their platform. Cutting off Twitter's Vine. Cutting off access, cutting off Vine, and keeping a list of competitors that they could punish if they wanted to by restricting use of data. So that's the kind of thing that regulators are going to look at and say, okay, maybe there's something here. Like maybe there is an actual antitrust argument to make with Facebook, considering how valuable they consider their users' data to be. Interesting. All right, Sarah Fryer, continuing to cover Facebook for us. I'm sure we'll see you back here next week. Coming up, Bitcoin continues to sink into the new year. Is it a trend that will continue? Has the Bitcoin bubble finally popped? We'll discuss next. This is Bloomberg. Cryptocurrencies resumed their slide Friday. Bitcoin falling as much as 8% to below $3,400. That is the lowest in more than a year. Investors reacted after the SEC dashed hopes that a Bitcoin exchange-traded fund would appear before the end of the year. Here now to discuss, Bitwise CEO Hunter Horsley. So how bad is the market going to get?
Yeah, I think it's in a tough place. It's been pretty painful over the course of really the whole year. So Bitcoin is down over 70%, Ethereum over 80%, our index of the top 10 assets over 80%. I think an important piece of context, though, that for many people who are newer to the space, is that crypto is a volatile asset class, and it's dropped over 70% more than 6 times. And yet, over the long arc of the 10-year history of Bitcoin, it's up, as many people know.
So the bubble hasn't popped.
I think that this is, in many ways, par for the course for crypto. It's even though it trades intraday like public equities, it's more of a venture stage phenomenon, and so it has this volatility.
So how are your clients reacting?
Yeah, it's a mixed bag. I think to share some numbers with you, we manage cryptocurrency index funds and beta products. About 4% of our clients have redeemed. Over 20% of clients have increased their investment. And then we work with a lot of large financial institutions, financial advisors. And I would say that's the audience that is really sinking their teeth in right now, trying to understand the space. People who view a bear market as an opportunity, they see it as buying in 2010 or 2009.
So do you have more investors coming in or going out?
Right now, more coming in. Yeah, actually, all year it has been more investors coming in, but I think the audience has sort of shifted. So towards the end of 2017, early 2018, it was more individuals with self-directed accounts who are making nimble decisions, and I think in Q3 and Q4, we've seen more interest amongst professional investors.
So you've launched 2 new funds this week.
Yeah, that's right.
$25,000 minimum.
Yeah.
How much demand are you seeing, and who is it coming from?
Yeah, it's coming from those sophisticated investors. So I think.
But can sophisticated investors handle some of this on their own?
Yeah, that's a great question. So there's a number of different options for investing in the crypto space, but a lot of investors like the fund format. Reasons that they like the fund format are they can focus on thinking about the investment they want to make. And then we take care of evaluating the custodians, storing the assets securely, integrating with the exchanges, the trading partners, dealing with reporting, answering questions when things come up in the market. And so it simplifies exposure. It's much the same reason that many investors like investing in oil through ETFs or gold through ETFs. It abstracts away a lot of that complexity.
So how much, in terms of assets under management, how much did you have at the beginning of this year, and how much do you have now?
We haven't shared that number publicly yet before, but
that's why I'm asking.
No, I know. And you're welcome to ask. It's a meaningful number, but and we've seen it grow throughout the course of the year, but not one that we've chosen to share.
So, what do you think? I mean, obviously, this is a very competitive space, despite the continued slide. Yeah. What do you think you're offering that's different from everyone else?
Yeah, I think the reason that a lot of firms choose to partner with us is the group of people itself. So we're a group of about 15 people now. About half of us have backgrounds in software, and the other half are veterans of the ETF and index fund industry. And I think a lot of investors have come to have the view that crypto is here to stay. Maybe it's the internet, maybe it's mobile, they're not sure, but it's here to stay, and they want to make sure that they participate, that their clients participate. But it's going to be this confusing, volatile thing. They're not going to become experts in it, and so they need to find the right partner for an extended period of time.
We've been talking a lot about Techlash. You used to work at Facebook and Instagram. Yeah. They're in a difficult position now. Yeah. Given the tumult in the cryptocurrency markets, any desire to go back? I mean,
no.
Is the BitLash going to continue?
I think that one of the funny things being in the space is that crypto has never felt more positively positioned. So at the beginning of next year, we'll see Fidelity launch custody. The New York Stock Exchange's sister, Bakkt, will be launching futures in custody. CME has launched futures this year, SIBO, and a number of others. So I think there are more participants than we've ever seen before, and a lot of reason to be optimistic.
All right, Hunter Horsley, Bitwise CEO, thanks so much for stopping by. I'm going to make you come back to talk about Facebook. Coming up, protecting the world from harmful AI. Our interview with Microsoft President Brad Smith on his fight to fix faulty facial recognition. That's next. This is Bloomberg. I'm Emily Chang in San Francisco. Microsoft President Brad Smith wants facial recognition software to be regulated before it gets out of control. Smith wrote a blog post saying the facial recognition genie, so to speak, is just emerging from the bottle unless we act. We risk waking up 5 years from now to find that facial recognition services have spread in ways that exacerbate societal issues. By that time, these challenges will be much more difficult to bottle back up. We spoke earlier with Smith about why he is taking on this issue. Take a listen.
We decided to take on the issue of facial recognition really for 2 reasons. First, It was important to our employees. They were asking questions about it, and as they were asking questions, we were hearing those same questions from customers, from civil liberties groups, and the others. And then second, frankly, once we thought more about it, we came to a clear conclusion, and the conclusion was that this technology is very promising. It's going to improve the world in many ways, but it also has a real risk of abuse. And rather than watch the technology move forward and see these problems created, we thought it was more important to be proactive, to be responsible, for the tech sector to adopt principles, and for the law to move forward so that this technology is regulated and the public is protected.
I'm curious about the reaction. Have you heard from any other companies, any lawmakers who want to work with Microsoft on this?
Oh, yeah, we've heard from a lot of people. I just spent the last 3 days in Washington, D.C. myself. Many of my meetings were with members of Congress, and it included a conversation about this. What we're finding right now is very broad interest. I think that there are many groups that want to see something like this go forward. And I think we're finding what I was sort of hoping we would find. There are some people that say this hits the mark. There are some people who say, oh, it should go farther. There are some people that say maybe this goes too far. That tells us that this is a conversation that, in fact, people are ready to have. And when you think about how legislation gets adopted, you got to bring a lot of people to the table and work through the details. And I think people are starting to recognize that 2019 is a year where this could actually start to happen.
What do you think are the chances, though, that legislation actually gets passed quickly in this environment?
Well, I think that there's two things to think about. The first is, what is the likelihood of passage in Congress? And I think that largely depends on whether we see a national privacy bill to which something like this could be attached, move forward in, say, 2019. And I think that's sort of a 50-50 proposition at best. The other question is, could we see something like this start to move in one of the states, or even a city? And I think the probability there is actually substantially higher. And I think that's a good thing. In the United States, we've long looked at states as sort of the laboratories or incubators of new ideas. And so we're hopeful that in even the first half of 2019, we will see real legislation emerge, real debates start to happen, and maybe even something signed into law.
The government is already using Amazon's facial recognition technology, which many people have expressed unease about. Do you think the government can really come up with good faith regulation when it's already in some ways benefiting from this technology?
Absolutely. I mean, it's good that law enforcement is using facial recognition in appropriate ways. The police in New Delhi used facial recognition technology to find 3,000 missing children. That's fantastic. And if you look at this study that was just done by the National Institute of Standards and Technology, they reviewed 127 algorithms from 45 companies, including algorithms from Microsoft. Ours was at the very, very top tier in terms of technology performance. Amazon didn't submit its algorithms. It wasn't one of the 45 that did so. So we feel good about where the technology is going, but let's recognize that social media is a good thing, and it turned out it could be exploited by a foreign government. Let's address the risks of abuse before we're reading about the accidents that happen, and let's do what we can to prevent them. And I think people who work in government get that. They want to see more initiative by the tech sector to take these kinds of steps. There is an appetite around the world for getting ahead of problems rather than watching car accidents based on technology occur before their eyes.
So let's talk about the car accidents. If what you are calling for does not happen, what is the potential for this technology to be used for ill? I mean, you talk about the bias, the threat to democracy, the threat to our privacy.
Those are really the three problems that we singled out and talked about yesterday. First, the real problem that still exists today in some places, especially as the technology is deployed, that it just doesn't yet work at the same level of accuracy for women or people of color. And hence, if it's not used properly or well, it will then create new risks for these groups. And what we have specifically called for is a legal approach that will put the market to work. We've said, let's put in place a law that will require every tech company that provides provides facial recognition services to make available information about how it works and enable third parties to test it. So let's put the Consumer Reports of the world to work, and that will incentivize the market to do better. Tech companies will do better. Customers can make educated choices. And then let's think about these broader issues. Before we see facial recognition in every mall and in every store, before we see governments using this for ongoing surveillance of individuals anywhere, everywhere, all the time, let's decide what rules we want to have in place. And I think the issues are specific enough that if we don't try to solve every potential question right away, we can start to put a legal foundation in place and really create a healthier technology market.
Could this mean real changes with respect to Microsoft's contracts with the U.S. government and foreign governments?
Well, what we also said yesterday is that we're adopting 6 principles now. They'll take effect in the first quarter of 2019 as we put in place the tools and the policies to support them. And this builds on steps that we've already been taking this year. There have been times when we've turned down business, whether it was for a law enforcement agency or for another customer. And we turned down business when we thought that there was too much risk of discrimination, when we thought that there was a risk to the human rights of individuals. So we are changing ourselves. We're not going to wait for the law to pass. And I actually think that is a conversation we need to have more often in the tech sector. Some companies just say, look, if the law changes, then we'll change. Why should people wait for the law to change in order to do the right thing? We all have the opportunity to get up any morning of any week and decide, hey, this is the day we're actually going to be responsible without making governments force us to be responsible. That is what the world expects of the tech sector, and that is what we should start to really demand of ourselves.
We will have much more of that interview with Brad Smith shortly. We will get his thoughts on tech and the Trump administrations as tensions from the recent trade truce rise. Plus, humans have gone to space in rockets for decades, but could there be a new way to look down on planet Earth from above? This is Bloomberg. On Thursday, Microsoft CEO Satya Nadella joined a group of tech leaders at the White House for a summit to talk about the future of jobs, next-gen tech, and AI. We asked Microsoft President Brad Smith about the meeting and what he thinks is in store for the future of U.S.-China relations after the arrest of Huawei's CFO.
I think the meeting went well. I just saw Satya briefly this morning. Haven't had a chance to talk about it, in detail. But I think it's good that people come together for these kinds of conversations, talk about the issues of the day. Obviously, one of the keys to having good meetings like that is to, not go talk about everything on Bloomberg TV. But I think it was a good day, and there'll be more days like that, I'm sure.
So in terms of what you can discuss, how concerned are you about the trade issues simmering right now and how complicated the situation has become?
I think that the trade relationship between the United States and China is very important across the board and including for the technology sector. I think it's really evolved in a way that it almost has 2 distinct pieces to it. First, I just think it's extraordinarily important to all of us, including in tech, that we get an agreement, hopefully, between the United States and China in this 90-day window. That started last weekend. We've got roughly 84 days left. These kinds of negotiations are always complicating and even hard. And so let's all hope that that goes well. Second, we are seeing real questions about technology. People are thinking in Washington, D.C. about technology differently from, frankly, most other products. And I think that we're going to need to have, frankly, a more nuanced conversation so that people really can learn more about how technology is created in the world today. There are some technologies that are sensitive from a national security or military perspective. There are many information technologies that are not. There is some information technology that is secret, but there's a lot that's not. There's a lot of research that gets published as papers. There's source code that's made available online. There are products that are built with people working on them around the world. And so I think as much as anything else, we have a lot of work to do in 2019 to help everybody think through just an understanding of the way the information technology sector works, how different it is in some ways from other industry sectors that have long been important to the national security communities of different countries, so that as people decide what kind of policy they want, whether they're sitting in Washington, D.C. or Beijing, at least they have the benefit of all of the information and knowledge they deserve.
And yet there's been a big potential wrinkle to any forthcoming agreement. The CFO of Huawei has been arrested in Canada at the behest of the United States. There are reports that some companies are reconsidering U.S. executives traveling to China. Do you have any concern about Microsoft executives traveling to China in this environment?
I think it's a little too early for us to have a definitive point of view. Obviously, we follow these kinds of issues closely. I would just say that I think this should all give even more impetus for the importance of really working through these issues. Each national capital needs to define its national interest, but I also think the world needs a stable relationship between the United States and China. It needs to be a relationship that serves well the interests of each country, but it also needs to be a relationship that benefits the world as a whole. Whenever you have the two largest economies of the world get together, I think there's really a responsibility to think not only about their own individual and collective interests, but what their relationship means for the world. So the sooner we can think about the broad issues and get some clarity around where our governments want to go, I think the easier it will be for those of us in the tech sector and elsewhere to navigate our way through what obviously is a complicated world.
The Chinese have made a good faith announcement to stop IP theft. I'm curious more broadly, how is this simmering trade dispute impacting Microsoft, or if this gets worse, how does this impact your business?
Well, we've been in China for 25 years. The world is complicated. Every country is complicated, and there have been many complicated days and negotiations over the past quarter of a century. We've gotten at least reasonably good at navigating complicated situations, but we're paying attention. We're following this closely, obviously, and mostly I would say what I've already said. We need a successful outcome in this 90-day window, and we're going to need to really sort through an understanding of how information technology works.
Last question, Brad. You're talking about how the tech industry and how Microsoft wants to be much more proactive about getting in front of some of these issues before they become car accidents happening before our eyes. And I have to ask you about Facebook. Do you think that Facebook has made some very strategic missteps in terms of how it has handled election meddling, how it has handled fake news, and how it always seems to be catching up rather than getting ahead?
Well, look, I always approach these issues from the perspective of we had a lot of challenges ourselves in the 1990s as a company. We made our share of mistakes, and because of that, I appreciate how hard this kind of situation is. I see what's happening at Facebook. I see what's happening at other companies, and I see people really working hard to think these issues through. I do think that fundamentally people have said, gee, I think we need regulation. You hear Tim Cook, you hear Mark Zuckerberg say, yes, we need regulation. Now we need to decide what kind of regulation makes sense. And I think as much as anything else, we need to come together and identify those spaces where a better regulatory framework will serve the public, and by serving the public, benefit the long-term interests of the tech sector. I would absolutely start with two areas. One is questions around privacy, including facial recognition, which is in many ways fundamentally a privacy issue. And the second is the threats that we are seeing as some governments fundamentally turn tools into weapons. That's what they're doing with information technology, whether it's cyber attacks, as we've seen, or whether it's disinformation campaigns on social media. And when we put these things together, fundamentally, it calls on the tech sector to take new steps, to be responsible and proactive ourselves, but it calls on governments to take new steps and for us to find a new way to work together. But we got to get to the specifics. That's what we did yesterday. And we need, I believe, to start to get to more specifics in 2019 on more of these issues.
Could China surpass the U.S. in AI if we don't?
I think we're going to live in a world where the United States is going to be an AI leader, China is going to be an AI leader, but the truth of the matter is certainly at Microsoft, we have a clear goal. I mean, we have a commercial strategy that's called, we want to make sure that every company in every industry in every country has an opportunity to be an AI leader.